Well, while the Canadian markets are down, one thing is up. That is the short positions on the Canadian dollar surging to a record. This is pure short positions on Canadian currency futures. But even when you look at net positioning, that is the longs minus the shorts, net positions are the most short also on record. Let's bring in Kathryn Kaminski, Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. Kathryn, thank you so much for joining me. First, can we just take stock of this stat? Because I think a lot of people are going to hear, oh my God, the most short ever. What's happening? Are things falling off of a cliff? How do you interpret what's going on in terms of positioning in the Loonie?
Well, to me, this is not surprising. Most signals have been short across the board, particularly for momentum signals in the Loonie. But another thing to point out is that, remember, interest rate policy has been one of the biggest drivers of differentials in currency performance. And given that the Bank of Canada has already started to cut, and we're seeing the US and other places a little bit behind, you're going to see that differential, that you're going to see a weakening in the Canadian dollar before you see a weakening in the dollar. And thus, this is not surprising to me.
And yet we've already seen the Canadian dollar underperform the US dollar. So the question becomes, how much more downside do you think there is?
Well, again, I think the key thing to think about is timing. If the Bank of Canada has the strength to actually cut more and faster, and the US takes a lot longer, which is looking like the case, you're going to see short-term pressure continue to be there on the Canadian dollar. And you've also seen some big differentials in other currencies such as EM. So there's definitely been volatility and general weakening for those currencies that have had rate cuts ahead of the others.
Do you have an idea of the kind of downside that the currency could see against the USD?
Well, I think the positive side for the Canadian dollar is going to be the fact that eventually the other central bankers are likely to cut. So this may be sort of a shorter term effect, but you'll definitely see that continued pressure as you see differential in terms of monetary policy. But it's not going to last forever because eventually other central banks are likely to cut as well.
Well, let's talk about some of those upside drivers. I know crude hasn't been in charge of the Loonie in some time, but crude prices at around $80. And also, when you talk about positioning this extreme, is there a risk that there's, that contrarian move, that there's a squeeze that pushes things higher?
Well, I think there's always a risk, and we've seen sort of pretty large, massive currency moves recently, especially for the carry trade. If you look at some of the news out of Mexico, some of the things that happened with the Mexican peso, and currencies are tricky in that sense because they're driven by multiple forces, not just growth, but sentiment and also monetary policy. So if we see some sort of shift in what's driving the Canadian dollar, I'm sure that you could definitely see a reversion in that positioning. Plus the fact that positioning is so large, it can move quickly.
And of course, we're talking about this in crosses. So let's talk about the US dollar, which has held in and it's been drifting higher over the course of the year. Monetary policy, better economic data than it seems like everywhere else driving this. Do you think there's much more upside in the greenback?
Well, this is a very good question. The dollar had been weakening some last month, but this month it's come back with some resilience. And most of the commentary that you'll see is really suggesting that there's few alternatives that are going to actually weaken the dollar. So if you think about it, what's going to make the dollar weaken? It's going to be when there's an alternative to that. And there really isn't any of the G7 currencies, particularly where you're seeing sort of that particular trade. And that's particularly true if you think about the fact that the Bank of Canada, the ECB, and other countries have started cutting and the US hasn't. So I think it's really a question of there's really no alternative to cross with the dollar right now that makes sense to weaken it at this point.